Glad to have you back. It's the Business Daily right here on Trust Television. And of course, we're going into that conversation now with regards to Nigeria debt portfolio, which the repayment debt servicing, talking about debt repayment, has risen by 49% year on year in the last 4 months. Of course, if you look at that statistic there, within that period as well, the foreign exchange reserve reportedly fell by about $3 billion during the review period. That will also be a major concern. Are we taking from foreign reserves to pay the debt? These are some of the conversations that we'll be having today, and I'm being joined now virtually from the capital of Niger State by Adegboyega Adebajo. Is an economist, investment banker, lead advisor, Amitest and Ashla Advisory. Good morning, Mr. Adebajo.
Good morning, Yusuf. It's great to be here.
Thank you so much
once again.
Thank you so much as always. Before we go into that issues around Nigeria debt portfolio and of course debt servicing, I want to get your take about the new CBN stance with regards to MPR. Some people are beginning to say, we're looking the hawkish stance. We've been on hawkish stance for a very long time, but now people are saying gradually that we are moving toward the dovish stance. Do you think we are close to that yet?
Well, I wouldn't want to guess yet. And of course, I don't know what the thinking is inside CBN at this time. But I think we should give it to half year to be sure what that graph is going to look like regarding NPR. You also know that whatever is going to happen to the NPR rates will be determined by how inflation itself behaves. We had a little dip the past month. Let's just hope it keeps reducing, and then the tightening monetary policy can be relaxed a bit. The tight monetary policy can be relaxed.
Indeed, talking about monetary policy can be relaxed. Let me get your take about the decision. Was it what you were expecting, given the fact that inflation had moderated in the month of April?
Yes, the moderation was pretty little. It was just a tiny drop. And I don't believe it was significant enough to have brought about a change. So yes, I expected the CBN's NPR to be maintained at the rate at which it was. We still need to do that at this stage.
All right, that is, we're being cautious in a way there. Moving on now, let's look at the topic for today with regards to Nigeria debt servicing. And of course, we're paying some debt. And of course, the debt servicing within the last 4 months has risen to 49%. What's your take when you saw that report?
Well, I wouldn't want to say it was worrisome. For me, it was to be expected. If you skim through the news in the past, since the beginning of the year, you would realize that we have continued borrowing and we have continued taking on new loans. It's therefore not surprising that compared to January to May 2024, we've had a significant increase this year. But let's say this. In 2024, there was a deliberate effort to try to reduce and to manage the excess cash in the country because of the ways and means that had been, well, so to say, abused by the previous government. And so what we're seeing now is essentially supposed to be a tidier arrangement. So rather than ways and means, there's borrowing. Now, why should Nigeria borrow? It's not unusual for a country to borrow. And it's, in fact, some people will say it's essential, because what you're doing is you want to fund critical sectors of the economy beyond what your revenue might be able to allow you to do. And those critical sectors tend to be infrastructure, health, education. We've seen the kind of infrastructure projects this present government has taken up. And it's important to be able to drive those projects through as much as possible. So I think they're making that priority. Whilst the health and education budgets have increased in 2025, Experts still say that it's not significant enough to make the kind of impact in those sectors. Indeed, I came across a news item, a story during the week, where the education minister wasn't quite pleased with the National Assembly passing bills to create new educational institutions when the current ones are not being adequately funded and brought to start. So that actually is the impact of not having enough money. So borrowing must or will indeed take place. The important thing is just how much should you borrow? Okay, and that's where the government needs to start prioritizing. What exactly are we borrowing to spend on? The government also needs to take some steps, which I'm pleased that they've actually done the homework correctly. And I'm speaking with respect to the tax reform. That's going to widen or broaden the tax base, if you like. And now that it's passed through the National Assembly, it's simply waiting for the president's signature. I expect by 1st of June, we will have the new tax regime. And this is me guessing here. There's no information anywhere. But I think that's pretty much a good date. The start of the 6th month of the year to put it forward out there in public and to start working towards it. No doubt, the only thing that Nigeria can do to reduce the amount of money it borrows, given the kind of budget it has, and to close the deficit, is to increase what it can earn from revenue. And our main revenue source, as you analyzed earlier today, is crude oil. That is dropping, that is unsteady. We're not certain the direction certain things will go in the scheme of international politics at this time. So we shouldn't be relying on crude oil. And that's where the taxation and revenue base comes in. And the second thing is the extent to which we can diversify. So those are key elements.
All right. How concerned are you with regards to the economic effects of increased borrowing without revenue growth? I mean, you made mention about the issue around crude oil, which is the mainstay of our economy. The revenue from that sector is dropping with regards to the low oil prices. If you benchmark that against our budget target for 2025, we are still way below that. How much of effect will this have on continue borrowing without corresponding revenue?
Yeah, it's going to be quite, it's going to have quite an effect. The first thing is, with increasing interest payments, what you're going to have is that some of the money that would have gone into critical sectors will be diverted to payments of interest. And that's not a good thing, first of all. And that, again, will bring about some degree of FX pressure. The Naira, we want to say now, is somewhat stable, but you're not going to keep paying those interest payments, and you wouldn't see the effect on your external reserves. So that's something that's key. And then if borrowing needs to continue and the borrowing is local, just last week, the CBN raised 600 billion in treasury bills, and it was oversubscribed. But that tells you something. It's a very easy thing to just put money into the treasury bills, sit back, and you're getting about 24, 27% on the money put there. But then if those bills keep being issued and the borrowing is done locally, we're not going to have inflation dropping, because it's going to start tending towards the level at which those bills are. And those bills in particular are going to have to go up themselves. So these are the sort of effects we will see. And that's why essentially economists will say we need to be mindful about borrowing at this stage.
Indeed, they're talking about borrowing and the same. Do you think in terms of crowding out public investment, do you think high debt servicing will consume us in the long run?
Oh yes, definitely. Like I said earlier, You've got the money in your pockets and you have a choice. Are you going to spend it on recurrent expenditure? And that's is a problem. It's something that's a challenge to the country as of now, the recurrent expenditure and the way it's growing, compared to putting it into those critical sectors, which when you spend money in those areas would assure that the long-term growth that the country is supposed to get will be achieved. We already have the medium-term expenditure framework, and I think it's important to be able to bring this into perspective and look at not just the budget for a year, but how the country wants to raise funds and spend money over a 3 to 5 year period.
Indeed. Let's look at, if you want to look at the implication, is enormous. Recently, Nigeria paid about $3.4 billion IMF debt, which was confirmed by the IMF itself, which Nigeria name be taken off the list of debtors at the International Monetary Fund. But a lot of people are saying IMF is not the only institution that we are indebted to. We're indebted to the World Bank, the China, and so many other institutions. Because if you look at the debt, this is as at 2024, about 142.3 trillion naira. Talking about September last year. If you share that among the Nigerian population, it means that each person in Nigeria is owing 624,527 per person. Someone like me here who is not really benefiting so much from the government, how will you reconcile this?
It's a very interesting statistic when you look at debt per capita, and it can actually frighten some people on the streets. But then again, that's the reality. What we've said, all these multilateral institutions are there, and lending to Nigeria is an interesting proposition because of the market it has, its size, and its ability to generate revenues. However, there's pressure in terms of generating those revenues. And it goes back to what we say. Some of these loans are based on some kind of partnerships. And perhaps for me, the best type of loans are the ones that are tied to specific projects, especially infrastructure projects, or instances that relate to health or education or human capital development. That means the money goes and is spent directly there by the multilateral partners. And so that achieves a lot for a country, as it were. But if it's not tied and there's an intention by the federal government to use it in a certain area, then we need to start being mindful of perhaps diversion. Because you see, when your debt to GDP ratio is that high, when your deficit is widening and your revenue is dropping, there may be instances of economic shocks. And let me try to draw a correlation. Let's just imagine a human being who's got money, cash in his pockets, and there is an intended use for it. But then suddenly there's an emergency of sorts. The tendency will be to spend that money to deal with the emergency. And that would also be the same situation with a country. So we do not have that buffer at all. If our interest payments keep rising the way they're rising, we need to be able to create that buffer. And that will help us when it comes to matters of public investments and being able to be resilient enough to withstand economic shocks. Of course, some of these shocks are caused not internally in Nigeria, but by international political plays that are currently going on.
Indeed. When you talk about creating buffers, are you saying the foreign reserve is not enough? Or do you think our sovereign wealth fund and so many other excess fruit accounts that we have are not enough, or we are not really making enough savings?
Well, you see, enough is relative. And, we really shouldn't, I mean, whether it's enough or not is not so much about the discussion. they're good where they are. They're serving the purpose for which there is a plan. Okay, so they're most likely adequate. Investments made through the sovereign wealth fund are not as near cash as your foreign reserves, which are much more easily accessible. They don't require you exiting a complex type of investments. But again, I'm referring to the instance of an emergency or an economic shock that's not anticipated. And in those instances, you need to go to where you've got savings and where there's money. So how much of a buffer do you need? What do you know? And this is why I need to go back to the aspect of the medium-term economic framework. It's there to be used, and we need to see that we're working along in line with the perspective for the long-term growth of the economy, not just the immediate growth, and saying that, oh, for 2024, we grew by this, 2025, we grew by this. Growth is better achieved and more achievable when you plan for it over the medium to long term.